We are sort of wondering whether, if there is a breakdown in quality or momentum, both, the chips could be the most vulnerable. And maybe you're seeing some signs of that this week. Week-to-date losses in the semis. Marvell's down 9%, AMD's down 5.5%, and this is outside NVIDIA, obviously. Micron's down 4%, Broadcom's down 3.5%. Broadcom, quality momentum, that's been on the list. Kristina Partsinevelos is here at Post 9 to help us look at this. Is that how you're thinking about this? Like, if you do have a bigger breakdown, your beat, your space is going to be the place to look, perhaps.
Oh, 100%. And I have so many comments to what you guys have said. But let's start with Broadcom and Marvell. Their earnings were last week. Why we're seeing this, weakness compared to other chip names is because, yes, they have AI momentum with their custom chips, but they're still exposed to the rest of the cyclical chip market. And specifically with Marvell, they guided weaker for this April quarter. So that, dragged on the stock. For Broadcom, they reinstated their full year target. Many were expecting that to go higher. They didn't. Yeah, there was some hype about the custom chips, but that you still need to keep that in mind when you talk about the momentum argument, when many of these chip companies, AMD, for example, are exposed to other facets of the market. And I question the timeline, which was what you both brought up. With NVIDIA, yes, they're launching their H200, their new B100, which is a completely new architecture for the GPU. They're talking about inferencing, which is 40% of their data center revenue, so that's going to help drive growth. But then you see a report from The Information just yesterday talking about Google, Microsoft, and Amazon warning that customers are cautious on their AI spending because they need to see that return. So I wonder in 6 months from now, if that return is not there, then those CapEx budgets get cut, and then that creates a different kind of momentum trade, or maybe less of a momentum.
Well, I think it creates at that point a reversal of the momentum for sure, and you're underscoring the element of why you've had this positive catalyst for all these semiconductors, because Microsoft, Alphabet, Amazon, they're sitting there, they're spending billions of dollars to build out the infrastructure, and they need these semiconductors to do it. And I'll go a little bit further. They need companies like Cadence and Synopsys as well.
But do they need that 2 years, 3 years from now? Constantly spending that amount?
That's a great question. Yeah. And candidly, Kristina, I don't know that anyone really knows the answer to that. What's the length of this cycle, I think, is the big question right now. And I think for people to come on the network and say, oh, I think it's going to be 6 months, I think it's going to be 3 years, I think they're just guessing.
But it's a possible risk.
The stocks are not trading like,
no, you're right about it.
We've given the benefit of the doubt, so to speak, to almost everything.
Yeah. The stocks are trading as if demand is sustainable forever. And if you just look at the charts, even from price to sales, bless you, for NVIDIA, you really see this just uptick. And so you question, there's comparisons with Cisco back in the 90s. Can it keep up this trend? Well, if those big guys don't come through, yes, NVIDIA will say, well, every other facet of the market, healthcare, auto, finance, they're all buying. But they're smaller players. They're not going to be spending, buying 200,000 GPUs, like, let's say.
Look at NXP's on the list.
NXPR is one of our holdings as well.
That's been one of those stocks that's been trading near a high. Jim Lebenthal just taking a little bit off the table the other day because, like, my chip exposure has gotten too big. It's making me a little nervous because the space has gone crazy.
Absolutely. And, I look at the performance of the semiconductors. We have 11% exposure, and I question, again, how long can this continue? My personal perspective is there's actually election risk surrounding the semiconductors. And I think there's big election risks surrounding the semiconductors. So that's probably one of my primary concerns from a fundamental aspect.
Well, there's not much concern on Wall Street because Broadcom reiterated to buy its city price target $1,560, $1,560 for Broadcom. So, there continues to be all this bullish sentiment around these names. No one is, really willing to give up the ship on these yet.
No, and I think the challenge is that this is the first wave of AI, and people understand that if we go back to the .com bubble, the impact, the longer-term impact that we're still seeing through cloud optimization, for instance, of the internet itself, that is the likelihood that this trend could persist decades from now in terms of what it can do for the larger economy. The easiest way, the easy button for AI right now, is chips. And so I think now you really have to take a step back and say, from a fundamental perspective, to Kristina's point, what companies are spending on AI that are actually going to be able to monetize that AI? You're going to have to show results a lot sooner than 2025. This is going to be a 2024 story for some of these companies, and I think that's where you could see money come off the table, not necessarily because the AI trend is not sustainable or defensible, but because there's better ways to catch this second wave.
NVIDIA is going to remind us early next week exactly what their dominant role is, correct?
Yeah, I'm going to be there. So it's in San Jose, and it's their big AI event, GTC.
Monday, Tuesday.
This is the first live event in 5 years, and there's so much hype around it that they had to rent out the SAP's stadium. So there's way more people expected. Every hotel is booked. We're expecting comments on, of course, their new chips this year, collaborations with partnerships, how they're going to monetize software. That's a big one for them, right? Because it's the whole ecosystem, and that's going to be the reoccurring revenue. And then inferencing, which was a little bit of a surprise, the second stage of a large language model, that is driving 40% of their data center revenue. But inferencing is at a lower price point, and then you think of their new AI chips, the B100, that's expected to be 30% higher than their H100. So, margins may be improved, but demand may drop. There may be demand shifting towards the custom chips from Amazon, Microsoft, et cetera. So there's a lot of factors at play. But normally, according to UBS, the stock tends to go anywhere between 5 to 6% higher post these events on Monday. This is on a 6-year average.
Yes. So there's alternatives to NVIDIA as an investment manager, but is there true competition when you think about it? It's NVIDIA and then everyone else.
Right. In the training process, no. I would say at the moment, no. But then in the inferencing stage, I do believe that there could be a lot more. And this is where maybe the technical side is not, the nerds in the chip world will say otherwise. But you have such specific tasks, and you can save a lot of money when you don't go for that giant expensive chip. So maybe I think that's where they'll lose a lot of the market share going forward. Right, but for now, first mover advantage. Right?
We'll look forward to seeing you out there Monday, Tuesday. Kristina Partsinevelos, thanks for being here.